All right, good day. Um, we're going to be continuing our class on fundamental analysis. We had from our previous class we had we spoke about fundamental analysis. Now this class is going to be fundamental analysis 2, and we discussed about we've already talked about how to use our technicals, and I was telling you that fundamental analysis has in-depth information that everybody needs to understand as far as you're a forex trader. And I can tell you that not everybody wants to trade or understand, not everybody will understand the fundamental analysis, but if you want to be complete as a trader, you should understand what actually moves the market. Don't forget that in trading we have the fundamental analysis, we have the technical analysis, and the sentimental analysis. But the fundamental analysis actually speaks about what are the market move, what actually moves the market. I call it the market movers. The market does not just move, be it metals, or let me just say commodities, currency, crypto, stocks, indices. It doesn't just move. There's a particular factor that makes this market moves. We need to understand what actually makes this market move. That's the reason why we have to study fundamental analysis. And from our previous class, we discussed how we can always get our information from the Forex Factory, investing.com, myfxstreets.com, myfxbook.com. So you can actually get all information, but majority of traders make use of the forexfactory.com. Now, we need to get a picture clear, to very, very clear. What are the things that makes the market move? There are so many economic indicators that makes every market move. And like I say, that if you want to trade your currency, you pick one or two currencies that you want to trade. You don't just pick all the currencies that you want to trade. Just pick one or two. You can decide to trade Euro USD, as the case may be, or trade GBP USD, because that's what I trade. You decide on what you want to trade as a trader. But that being said, you should be able to understand what actually moves those currencies that you want to trade. Now, Euro USD as a case study. We want to compare two economies together, the European economy and the United States economy, and we want to benefit from the deficiency from these two currencies. We already know that if I'm going to be trading Euro USD, I'm looking at a particular currency that is stronger than the other. Either I'm going to buy or I'm going to sell. But you need to understand some factors which are called the economic indicators that actually makes this market move. Every economy of the world, or let me say every country of the world, has their central bank, which brings out policy that actually affects the economy generally. Now, for the fact that you have now chosen Euro USD as what you want to trade, now I want to look at the central bank of the United States, and I want to look at the central bank of the European Central Bank. You know that Europe is not just one country. You have Germany, Italy, France, and so many countries like that. So you have the European Bank, Central Bank, as the case may be. Now, any information or any speech or any event that these central banks releases will either have high impact or have a low impact. Some people go as far as saying that it does have medium impact, that doesn't really, it moves the market but not too much. But we want to look at the news or the speech or events that actually moves the market, that has what we call high impact. Now, I already told you that any box you see here that has a red box actually moves the market. Now, what are the economic indicators that actually moves the market? Every economy, for instance, I told you that we're going to look at it from a macro view perspective. Now, I want to know which economy is performing very well and what are the things that that economy must do to make sure that they perform very well. Every economy wants what we call price stability. They want to control inflation. Every economy wants what we call full employment. Every economy wants what we call growth, which we call the gross domestic product. Every economy wants what we call, even distribution of income. And if you look at America very well, yes, they are billionaires, they are millionaires too. But you notice that it's kind of even. Not that we have the rich separate and we have the poor separate. The same policy that governs the rich also governs the poor in America. So every economy wants to manage every resources such that there's going to be even distribution of income across all the citizens of the country. That's the major objective of every economy. And what are the ways that they can use to achieve all these aims or all these objectives? A central bank is given that that power to be able to control the economy of every country. There has to be full employment, meaning that everybody has to be involved. Employment talks about, or let me just say, occupation is an activity. We call it an economic activity that people get themselves involved in, so that they can earn some income from it. And whenever everybody gets full employment, which is not possible, not everybody's going to get employment. So that's why they come out with every news to see the unemployment rate. Like America, for instance, we have what we call the NFP news that comes out every month. They want to know how many people that is unemployed. Because an idle ant, or how do I use this? There's this balance that this is called an idle man. If someone is lazy, or if you're idle, it's the devil's workshop. Like you are not doing something. That's when you think of so many things. Oh, for instance, now look at all these area boys we have all over the places that they don't have income. In the morning they are not going to work. Afternoon they are not going to work. Night they are not going to work. Although it's their choice anyway. But if they sit down there and you are going to work, when you are going to work, you meet them there. Hey, Baba, you need to, as soon as they're coming back, they did the same thing. One way or another, they will think maybe the card I use on Monday is not for the one you use on Tuesday. It's not for the one you use on Wednesday. So they already know everything about you. And for the fact that they are not busy, they will have your time. They will look for a way to say, okay, let's collect money from this person because they are idle. That's why the economies of every developing nation wants everybody to be involved or participating economically with full employment. But we do know that it's not possible. Some people will still choose not to work, So that's one of the aims and objectives of every economy. And this news that comes out will move the market. Because the more people work, the more they earn more money. And the more they earn more money, the more they spend. And the more they spend, the more prices of goods and services increases. And once the prices of goods and services increases, it brings about what? Inflation. And once there's inflation, they used to say that inflation shouldn't be more than 2%. But if the inflation is now above 2%, 2.5, 3% and all that, then the central bank will step in to control the inflation. Then that now brings about what I just called, what do you call it now? Price stability. Because every economy, like I said, their major objective is full employment, price stability, what do you call it now? GDP, control, yeah, this same thing as price stability. What do you call it now? GDP, you know. So these are the major things that the economy wants to achieve, and those things actually moves the market. There's so many information that comes, you know, that when you see them, it doesn't actually move the market. Like if you look at German bank holiday, business services index, what do you call it now? MPC member speaks, USD denominated trade balance. Although trade balance too actually moves the market, you understand? But major things that actually moves the market are news that related with that related to unemployment, news that are related to inflation, news that are related to interest rates, news that are related to PPI, which is under inflation, PPI, CPI, purchasing manager index, PMI. So all those ones are under what do you call it, price stability, which inflation can actually come up from that from the price stability. And once it rose above 2%, then the central bank will step in, bringing out what we call high interest rate. If you look at this place now, you notice that I think somewhere here, you notice that interest rate in for every economy is stated here. Hold on, let me show you this now. For every economy, there's an interest rate that is being for as per America. I think the interest rate is 5%. Now, okay, it's trying to load. So, whenever there's high inflation, then the central bank of that economy will do what? Step in to increase what? Interest rate. And once they increase interest rate, people will drag back a little bit. They don't want to buy more. They don't want to spend more again. But they don't want to go to the bank to get loan, because they know that high interest rate. They want to benefit from that interest rate. So instead of them going to get money from the bank, they will either go and save their money in the bank, and there is less money in circulation. And once there is less money in circulation, not everybody wants to buy more. And the more the money has reduced in the economy, then the price will come down a little bit. And once the price comes down, then now people are earning more interest from their savings. And once they get more savings and more interest from their savings, then the economy is dragging back a little bit. Like I used to say, that inflation is good for every economy. That means that there is an economic activity that is going on. People are buying and selling. And once people are buying and selling, the currency will appreciate. You understand? Because there's economic activity. But in the case whereby it's now above, the inflation is now above 2%, so that prices is now, some people might not even be able to afford some goods and services. That once there is inflation, then the producer will increase, those that are selling will increase the price of goods and services. And once they increase the price of goods and services, then there's inflation. Then it has risen above 2%. Then the central bank steps in again, put another interest rate. You understand? So one of the things that they do what we call quantitative easing and quantitative tightening. Quantitative easing means that when there's not much money in the circulation, they would sell bonds, to the general economy. They sell bonds to the economy. So people will just go, they'll buy bonds rather. So if when the economy is giving some issues, they've already sold the bonds to the general public, and people they have their bonds in form of certificates. You know what government bonds. Yeah. So now that's quantitative tightening now. So there's much money in the circulation. Now once there's inflation, they want to bring out some money from the bank, from the economy. So they tighten the economy using what we call quantitative tightening. So people now begin to submit their government bonds so that they can get money from the government. So we have quantitative easing and they have quantitative tightening. Quantitative easing means that they want to put more money in the economy And quantitative tightening means that they want to get, if there's too much money in circulation, they want to buy more, they want to take money from the economy, so that they don't want money to be everywhere. Once money is everywhere, then people will not value it any longer. So they begin to spend anyhow, then prices will rise. So there's quantitative easing. Quantitative easing when there's not much money in the economy, so people are going to pump money in the economy. But if quantitative tightening means that they want to get more money back from the quantitative tightening, that they sell bonds for you. So you come with your money, you bring your money to the economy, and they give a certificate. So they've collected money from you guys. Now, if there is no much more money in the economy, they want more money in the economy, then they begin to, sell it back. Then you bring the certificate. Then there's much money. They pay you with interest. Then they put more money in the economy. So that's quantitative easing. Quantitative easing and quantitative tightening. So there's something I want to show you right here that talks about the interest rate. Okay, I've seen it for each country. I think it's down there. Okay, see it. Now, the interest rate for the pounds now is 5%. For America, it's 5% too. New Zealand is 4.75%. Australian dollar 4.35%. Canadian dollar 4.25%. Euro 3.65%. Swiss franc 1.00%. Then JPY less than 0.2%. So this is the interest rate that they are using this to control the economy. So this 5% you are seeing now, if you put your money in the bank, you get 5% on any money you put in the bank. Sure, you understand? But if what do you call it now? That's if you are saving. If you want to borrow from the bank, at the same time, you are paying 5% on interest for how much of money you are collecting from the bank. So that is what the interest rate talks about. And I want you to know that how does this now affect the currency? Just put this in your mind that everybody want to buy a currency that is doing very well. This is what you're going to do. Pick a box. That's what I do. I'll pick a box. If I'm trading, if I'm a scalper, for instance, I'm just looking for short movement from the market very, very fast. I want to know the currency that is doing well. I want to know currency that is not doing well. I want to know currency that has strength. I want to know currency that is weak. I will now pair both together. I'll just say strength, strong, weak. You draw a table. I'll say strong, weak. And I'll now go to my forex factory to check for currencies that are weak. Now, how do I know the currencies that are weak? Same way I come to this place. What are the informations that I impact news that will actually move the market? I told you these are the informations that are red box, right? I'll come to the red box. I'll check the actual event, because the event has actually happened. As I'm using Tuesday as an example now. The event has actually occurred, right? I'll look for the actual event. I'll look for the forecast, and I'll look for what? The previous, right? Now, if it shows me that people use the forecast and the actual, but for me, I would advise I use the previous, because the previous has actually happened. So that's what you can use to judge the economy. But forecast can just be simulation. Economists just they do their own analysis. It's not real, but previous has happened. So that's what you're going to make use of. Me, I use the previous and the actual. Actual means that it has happened. Sure, you understand? But forecast is that it might be less than or greater than. No, they are not sure. So, but for me, I'll use the previous and I use the what? Actual. Now, let's go to the previous and actual. High impact news, don't forget. Now, high impact news for GBP now shows me that my previous news, my previous information on claimant count charge is 0.3 thousand. You understand? And now, the forecast is 20,000. Maybe there's particular negative news on this information, which I'm still going to click on it now. So the forecast is now 20,000. Look at how high it is from the previous 0.3k. That's less than 1,000 here. Now they forecast that 20,000. You know, Claimant County. I think this is going to be an unemployment information. Unemployment. That means that 20,000 people couldn't find a job in UK. They're forecasting that 20,000 people are not going to get job in UK. But previous month was saying that it was just less than 1,000 people that couldn't get a job. And now the actual gives us what? 27,900 people couldn't find a job. Now this is like a shock to the whole world. Meaning that it's going to have an high impact on the currency, GBP currency. This is a massive sell for me, if you ask me. Reason being that it's going to weaken the GBP currency, because unemployment claim is one of the major high impact news that will affect any currency. Any currency, you see that is having red boxes. Now look at this one too again. That is having red, what do you call it now? Actual means that this one is going to actually affect the economy. Any news that affects employment, any news that affects interest rate or price stability, any news that affects GDP, any news that affects PPI, any news that affects consumer price index, that's CPI, any news that affects PMI, purchasing manager index, that's for America rather. So there are so many news that comes out from every other country, but because I trade USD, it's good for you to be able to understand just one currency, so that any news that comes, you know the effect. Not that you are jumping from here, you don't even know what you are doing. But if you can be able to understand one currency, or any currency that I'm trading now has to be paired with another one. I already understand US. I know when their news is going to come out. I know FOMC. Any news that comes out for FOMC, that's a Federal Open Market Committee. We did it last time. Means that they want to. There's a meeting that they have a committee. They're going to be having a meeting deciding on what the interest rate is going to be for that month. So that's why they used to have month per month information. This information you are seeing here is yearly, but for, you see, there's another one that talks about monthly. So they want to be keeping check of every activity in the economy every month. So there's some information that comes out every day, but majorly American information comes out every month. NFP comes out every month. That's unemployment claims. They want to be sure that everybody is engaged. You don't want any idle hands, you know. And any news that comes out from interest rate, because it's going to affect, if there's high interest rate, that means that people are not going to get much money in the economy, and it's going to affect inflation. Inflation is going to do what? It's going to rise. So once there's inflation, people will want to buy that. It must not be more than 2%. So if it's more than 2%, then there's going to be what we call so many issues on that currency for that country. It has to be balanced at 2%. You understand? So everybody wants to buy a currency. Now, am I buying or selling? Any currency that is what doing very well, people want to buy that currency. For instance, I pair USD JPY, for instance, and a news comes out now, for instance, from unemployment that and effects now the previous and after, maybe I now have a green button, green information there showing me that, oh, there's no issue. So that means that what are you going to do? You're going to buy. You're going to buy USD against JPY. So in your technicals now, you just click on your buy. There's no two way about it. Everybody wants to buy currency that is doing very fine. So that's going to affect. Now you already have that at the back of your mind. So you now move to your trading view or technicals. You already know that you want to buy. So no matter what, you already know that you want to buy, because there's a news, high impact news that come out for that period. Once a news come out on all those things that I just mentioned, price stability, unemployment, GDP, even distribution of income, any news that comes out of all these things. And you know, when I say price stability, under it you have PPI, you have CPI, you have PMI. Everything talks about price. So, but under it we have different things. Under full employment we have unemployment claims, we have employment claims, and that. If it is risen, if unemployment rate has risen, that means that it's bad for the economy. So that means that economic currency is going to be what? Weaken.
Yes.
So people are not buying that economy, they want to sell that economy because they don't want to hold on to any currency that is getting weaker in their hands. So you understand? So they want to sell that currency. So the only thing they just do, they pair. You can't pair two weakened currencies together. Like if you check your information here right now, and you notice that two what do you call it now? Two currencies are weakened. Don't trade. You can trade it if that's what you trade, but you're not going to see significant moves in the market. You can just be seeing it come down, ranging, So it's not going to give you a clear move. But there's some that you just see that the market is moving technically. It's going to be moving, but it's not going to be moving at that high pace when there's an high impact news that is being released. Once there's an high impact news and it's favoring the pair that you want to trade, that you are trading, for instance USD, and the news comes out and it's showing that green, so that means that you are buying more of that currency. So that means that for that day, until a particular news comes out again, maybe the news that means it might be that you'll be buying from now till ending of next month when another news is going to come out, because already everybody has the bias in their mind that the GBP or the USD currency is doing very fine for this month. So because we already have a news, we are waiting for the next news that's going to influence your decision. It means that you already know that for this month you want to buy, until a news comes out to counter that buying. So that's why I see that people hold on to, they are expectant of the news every month. They want to know whether I'm going to buy or I'm going to sell. Although your technicals is going to show you the direction of the market, which you already know how to detect that. But if you want to be ahead of the game, you want to be ahead before the market even begin to start going a particular direction, you already have a news that already tells you that this market is going to the right. Because if it is positive, you know that people want to buy more of that currency. If it is negative, people don't want to, but they want to sell that currency. You understand? So you already have that bias in mind. So when you now move to your technicals, then you now begin to draw your trend line, your support and resistance and everything. You already know that you want to buy for this week, you want to buy for this month. So that is as easy as that. Mind you, I talked about what do you call it now?
CPI.
Not just CPI. High impact news.
Yes.
High impact news that is in red box.
Yes.
Look at FOMC. That's a Federal Open Market Committee. So all these things you are seeing are not really moving the market. That's why you see that not much is happening. You understand? But any news that comes out, as the case may be now, let me just list the news that comes out for America, US, if you are trading USA. Number one is the FOMC. FOMC. Whenever you see that FOMC are having a meeting, don't forget that you need to put into consideration speeches, news, events, and reports. Speech, any speech that you notice that maybe central bank governor of a particular company or a chairman of a particular country rather, or a central bank of a particular the governor of a particular central bank of a particular country, just know that the speech will actually move the market. Any speech you see, any report, any news or any event, you must look out for the effect in the market. Now, I talked about the news that comes out in America, FOMC. Whenever you see FOMC, that means they want to deliberate on interest rate. Whenever you see FOMC, it means that they want to deliberate on what? Interest rate. And those are, they call it federal, those that the CBA, the Central Bank of the United States of America. So when you see FOMC, so it's a committee of people that want to, and how do they come about this information? They check their previous interest rate. They check the PMI, which is a purchasing manager index. They check the PPI, a purchase price index. They check the CPI, that's a consumer price index. They check average earnings. They check inflation. They check unemployment. They also check durable goods. Now, durable goods means that if the economy, because like I said, America, they put things into details. They check everything after the other. If people are buying much of there are non-durable goods and there are durable goods. Durable goods are goods that can last for more than 2-3 years. If anybody is buying that type of product, it means that the person is earning more money. You don't understand? Not just that non-durable goods are just for them to just eat. They want to, just to consume. You understand? If you see notice that more non-durable goods, that means that people cannot even afford high gadgets. That means that there's not much money in the economy. That can in itself, for a particular month, if the amount of people that are buying television, which is the durable goods, are much more higher than last month, that means that people have money. So there's money in the economy. But if what do you call it? The amount of television, or not just television, the amount of durable goods that people are buying have gone much more lesser than what they're supposed to buy. That means there's no money in the economy. They believe that that means there's no money. So what do we do in using the durable goods? People are not buying much of these durable goods. That means they want to decide on the inflation rate or the interest rate for that economy. Whether the interest rate has risen from 2% to 2.5 or whatever, 3% or maybe gone higher. They want to know why are people not buying this thing. Durable goods, people cannot even buy durable goods, that means that they don't have money. They look at the unemployment, maybe as a result of people are not getting employed. Maybe that's the reason why they can't afford to buy this. Maybe there are some of them housing data. They look at housing, the more people buy houses, that means people are not homeless. If people have much more houses, maybe people are buying houses, they are getting mortgages. When people are selling houses, that means that people are actually living in houses, that people are they have shelter. But you notice that the amount of shelter has reduced drastically. Are people living in the streets? They want to be concerned about everybody in all the economy. Those are the data that they will look out for. So that means that we need to reduce our interest rate. So that's how we come about the interest rates, how we decide on the interest rate. So all those interest rates now, the more, and these data are very, very important. When there's interest rate, and why does that concern you as a trader? It concerns you because if the country's currency does well, then you will benefit from that currency. You buy. If the currency does not do well, you are going to sell. That's your own bias. That's what you want to that's what you want to. You are not living in America, but you are living here in Nigeria, but you want to trade USD. You want to know all those news. Once there's a particular news that comes out from these FOMC guys, where are they? Yes. FOMC. Let's now assume that it's showing a red box now. You go and check the actual effect. In fact, let's even click on it and let's see what information they have. Let's check this one that has a medium impact. Now, let's look at this now. Whenever you see Federal Reserve, that's the CB, Central Bank now. They don't call it Central Bank, they call it Federal Reserve. Now, due to speech about the economic outlook at Stanford audience question expected, Federal Reserve Governor Christopher Waller, more hawkish than. Hey, so sorry.
Network.
Okay, it should be the network, right?
Yes.
Now, I need you to write two statements. There's what we call hawkish and dovish. Hawkish, like in form of hawk. H-A-W-K. Let me know when you're set. Now,
Set.
you said, okay? Now, the Federal Reserve Governor, now I'm talking about this is for news for America now, but this is a million impact news. So, information, there was information on September 20. There was information on September 6. There was information on August 8. So that means that by month, they bring out news every 2 weeks. You understand? So this is another one. This is another one. July 18, and we have so much more. So now this news that comes out now is talking about interest rate. You know, I talked about interest rate before. That whenever you see FOMC, that means that they want to decide on the interest rate. But maybe now that it's not showing us a red box, it's not showing us an high impact, it means that it's not going to affect the market. Maybe they decided, maybe they're just having a kind of a meeting, you know, you understand. But once it shows us red, that means that they made a decision. Meaning they are still having a meeting, contemplating on what the interest is meant to be. So whenever you see FOMC having a meeting, bro, interest rate, and if interest rate actually moves the market, interest rate will actually affect the inflation. Once there is inflation, prices of goods and services will rise, so that you will be able to benefit from that currency to buy. You understand? That's what you want to do. You understand? So interest rate, that's it. So FOMC. So I talked about hawkish and dovish. So usual effect now, there is an effect on this news, but not that it doesn't really affect the market really. But they say more hawkish than what expected. There's hawkish, there's what? Dovish. So Federal Reserve FOMC members vote on their it's a meeting. It's a board of committee. They want to, vote whether the interest rate should be on this or, you understand. So vote on where to set the nation's key interest rates, and their public engagement are often used to drop subtle clues regarding future monetary policy. Don't forget that I said that the central bank of every government use monetary policy to control the economy. And what are the monetary policy? That's why we talk about the interest rates, talk about the price stability and all that. You understand? That being said, you must be able to understand the effect of the news. Whenever you see FOMC, bro, just it should be part of your. Let it be part of your. FOMC comes out every month. You understand? There's some that comes out. Medium impact comes out every 2 weeks. But everyone that now last week when we did our class, FOMC was showing a red box rather. So that means that it's going to have an effect. They decided. Now this one is deciding on next month now. So they're getting all the data. They're getting all the data from CPI from.
So when the box is red, they decided
announcement. Yes, and that announcement is going to affect your whole decision for the whole month. Now, any news that is coming out now does not really have much impact because it's just a meeting. So you understand? If you look at it, we talked about them having a meeting. So on the daily basis they have meetings. So that's for FOMC. Interest rates. I'm sorry. Let me just quickly throw out this so I can answer your question. That's for interest rates. FOMC that's for USD, the United States dollar currency. Then another news that comes out every month is NFP. That one deals with what? Unemployment. The more work people have, the more money they have, right? Yes. And the more money they have, the more they want to spend. And the more they spend, the more the inflation rate goes up. And once there's inflation, people once there's inflation, that means that prices of goods and services has risen up, and you want to benefit from. And there's going to be what? High interest rate, and you want to benefit from that discrepancy. So that's the reason why you're going to buy that currency, because of what do you call it now? Of that information. Now, can you ask a question now?
Yes, I want to say, is there any way to know if the effect before the announcement?
Yeah, before the announcement, you check the previous information. You check the previous information before the announcement. That's not the first announcement. They made an announcement last month, so that's what people have been using to trade till that period that you are expecting another information.
Because it's possible for there to be inflation 2 times in a row.
Yeah, it's possible. And once there is inflation in 2 times in a row, that means that the price keeps going up.
So how do you know that the next news is going to either go up or down? Would it be on your technical analysis? But I feel this news effects, technical analysis might not be able to bring it out fully.
Okay, technical analysis will bring it out. Now,
Bring out the
do you know-
actual direction that
Yes, do you know why? The reason being that some people, like I said, some people don't even go to fundamental analysis. They go to their charts. The technical analysis is showing us the minds of people already. It's not, you are not the only one that is on that platform. There are some people that are trading fundamental analysis. They bring their own bias to the technical analysis platform. You too, you follow what they are doing, because why are you following what they are doing? Is because if the price is going up, are you going to be going to buy? This is to sell. They already have the information. The banks are there, the edges are there, the insurance companies are there. They are ready to get information. So they already have the information before you sell. And there's insider information. I need you to understand that. So they already know where the market is going, even before the news. Before they announce the news, there's some people that in the house that are trading forex too, that they already buy already. So the market is going already up now. Then you that you are not even trading fundamental, you see that the price. And if you are a very good technical person, you already saw that the price is going up. Are you going to sell? You're not going to sell. So you go with the flow of the market. So you are not just the only one that is in the market. So that's why, even if you did not trade, if you did not trade your fundamental news, you will still be right using your technicals. Because some people are trading the fundamental news and they are still in the technical. So they bring their own bias from their knowledge from the fundamental, bring it down to this space. And you that you are very good in technical, whenever you see a particular move, you already know that today is going to be buy. You already know that. So if you see a spike that just goes high, so it has already shown you that, oh, it means that this week is going to be buy. So that's it. So the major news, you have another question?
No, you've done FOMC.
FOMC, NFP. FOMC talks about interest rates, just as that as well. NFP talks about unemployment claims. Then FOMC talks about interest rates, and interest rate is as a result of prices, price stability. You know, don't forget I talked about price stability. It's as a result of price. It's as a result of what? Inflation. And everything comes under that. Price stability, we talk about CPI, that consumer price index.
That is part of interest rate.
Yes, yes. No, just go to another one, right? Price stability. Price stability, same thing as inflation. Not same thing as inflation. It gives us information about inflation or deflation. Price stability. So under price stability, you have PPI. Those are for the producers, those that are producing goods and services. Are you there? So the PMI, those that are purchasing, PMI, those that want to purchase what do you call it now? Manufacturing items like things, PMI. Producers is just for the price that they want to sell their goods. You understand? So not just one producer, all the producers in the economy, they come with all their data, they decide on, these are the information that the CB, Central Bank of that country, they need. So CPI is for the consumer's price. How are people reacting to what do you call it? How are the consumers reacting to price? PPI, how are the producers reacting to price? If they don't produce, how will people consume? PPI, CPI. So PPI, those are the people that producers that are what producing. If the amount of what their raw materials is expensive, they are going to react. And once they react, that means they are not producing much, right? If they are not producing much, it means that the consumers are not consuming much. That's PPI, CPI. So all those ones falls under price stability. Sure, understand? So another news that I need to look out for is balance of payment equilibrium. Now, balance of payment equilibrium talks about the deficit and surplus of balance of payment from one economy to the other. What do I mean by this now? If Nigeria is doing business with America, for instance, we trade in their currency. If I'm going to be buying stocks from USA, it means that I need more of their currency, which is in USD, right? And the total what do you call it now? Exports. Okay, imports right now. if I want to get something from, if I want to buy goods from America, I'm importing, right? My importing must be equal to my what? Export. The more I import, the more I should export too. So the balance of payments will be equal. But if I import more than I export, then there's what we call a deficit. Because much of my own currency, I'm spending it out there, then because I have to pack a whole lot of money to just pay for, I need to buy their own currency that will just give me maybe 2 or 3 pieces of their own dollar or whatever. I'm packing more of my own money, leaving my own economy less. For instance, if this is the amount of money that we have in the economy and I want to go and import, I'm packing half of this to just get little of of their own currency. So that means that my own economy, I'm taking more of the cash that is in circulation to another country. So there's going to be a deficit, which is going to affect my own economy. But if my import is equal to my export, or my export is greater than my import, there's going to be surplus. I don't know. Do you understand? Maybe I should come back. I should come again.
I'm understanding.
We have import and export now. For instance, every country needs to export more
Export more and import less.
and import less, right? If they export more and import less, if they export more and import less, there's going to be surplus
Surplus
in your own country,
Your own economy.
your own
Yes.
economy. But if the import is greater than your export, there's going to be deficit.
Definitely.
So that means that you're going to pack more of your money to you. So you understand? So
I
that,
understand.
but if it's equal, then there's going to be what?
So you have to be
Equilibrium.
balanced and everything.
It should be balanced. That's what we call balance of payment equilibrium. So now it involves the currency of two countries. Sure, you understand? Any information, now you look at this on balance of trade balance. See, for CNY, that's what Chinese yuan, trade balance. Let's read it. Let's see what they have here, so I can understand this thing. Although we are not trading any currency that relates to trade, Chinese whatever. Difference in value between imported and exported goods during the previous month. That's trade balance. The actual is greater than the forecast is good for the currency. Release monthly, including February, about 10 days after. So that is what trade balance actually talks about. But we are not trading this anymore.
Difference in value between imported and exported goods.
Yes, but you need to look out for the news. If it comes out for that currency that you want to trade, for instance USD, it's very, very important. Very, very important. But for the fact that you are not trading it, you are less concerned about it. But it's for it, you can just know it for your own knowledge sake. But if you understand it, you can apply it to any currency that you are trading. So we talk about trade balance, balance of trade equilibrium, balance of payment equilibrium. Then equity, we talk about even distribution of income, so that some people are not living in Lekki, while some people are living in Adangbadi. You understand? So they want everybody, even if you are living in different area, the same law that governs the rich has to govern the poor. The same income that you are earning, I have to earn the same income. That's why you see that they pay per hour. They pay per hour. If they are paid per hour in New York, they have to pay per hour in Los Angeles, and that will be the same amount of money, the same amount of pay per hour, maybe $15 per hour. So it has to be generalized in all the economy. Not that some people are collecting 500,000 per month, and because one is 11-12. What's the meaning of 11-12 or whatever? This one is in is 11-1. It's collecting 50k. So you understand? There's not going to be even distribution of income. So some people are rich, some people are poor. So that's one of the major things that the central bank of every country try to control using their own monetary policy. So that's why, if that's the case, for every money that you save in the bank, if you are earning more than you are earning much more than part of the citizen, maybe somebody is earning more, then that means your own tax will be much more higher. If you like have 10 cars, the more tax you are going to pay. So it's still going to be the same. So you, instead of that, you look at the amount of money you are paying for tax. You just let me sell all this in my car. Let me just have one. So if you now have one car and this person has one car, so are you not equal now? You are equal. But if because you have more money, the more money you have, you buy more cars. Not in Nigeria that they don't tax cars. So if you now have 10 fleet of cars, for instance, now, and this guy has just one car, and you're not being taxed for this, you're not being taxed for this, then that means that you can decide to use 10 cars, and when you bring your 10 cars on the road, then cost hold up on the road, and everybody's you are using your own selfishness to affect others. You understand? So at the same vein, they are not taxing you enough. But if they tax you and you are paying maybe the tax you are paying on each car, you notice that maybe you are 10, you are maybe a particular bus, you decide to even put all your family in one bus and just drive them to wherever they want to go to. So you see that you are cutting costs. But even distribution of income is not. Africa generally we don't have that. But they have that in the developed countries. So that's for even distribution of income. All this information are all high impact news. Yes. They are all high impact news. So it affects the market technically. If you want to trade the market, the forex market using your trading view. So that means I think that's all for the fundamental analysis. So don't forget, I'm still going to discuss about there's something I still want to discuss about in this fundamental analysis. Okay, I've talked about housing data, right?
Yes.
Now I've talked about mortgage. I've talked about the housing. What do you call it now? New homes. If people begin to buy houses, that means that there's so much money in the economy. I've talked about that. That's housing data. So that's that about that. So the next class I'm going to discuss about candlestick. Don't let us forget. That's very, very important. Candlestick and chart patterns.
After candlestick, conferences.
Conferences, yeah. Candlestick and chart pattern.